Wall Street having a better day of it again for the second day in a row. We have made up now about close to half the ground we were losing, for example, in the S&P 500 over those three prior sell-off days. Still a lot of volatility out there. I tend to focus on the fear gauge, that CBOE volatility index. It had hit close to 40, still going in and out of the 20s, which is still reasonably high at around 19.53 right now. So again, kind of hedging their bets right now. Let's go to Charles Payne, get his read on all of this, the Making Money host, best-selling author. Charles, how do you read the markets these last 2 days? More indicative of what they should be doing in this environment, or the 3 days prior when they were selling like crazy?
I think this is a market that is getting a grip on the two major issues. One is the Omicron variant, which you started your show pointing out trends in South Africa are very, very give us a lot of optimism. We've had two studies. In fact, the headlines this morning, there were two studies around the world that sort of confirmed that this is a lot less fatal, less hospitalizations. And that's when this market, which was extraordinarily indecisive before the open and right after the open, started to get a big head of steam to the upside. I also like the fact you pointed out volatility, Neil. I think for a lot of investors, this has been a tranquil market for a long time, and they're going to have to get used to this. So far, December, this has been the most volatile month of the year. In fact, this December, it's about 50% more volatile than any December on average, going back to 1953. So I say buckle up, but I do love this action. I do love the fact that we were smacked down on these anxieties between the new COVID strain and a new Federal Reserve, Powell 3.0. And the market is coming to grips with both of them. We got to live with both of them and looking beyond that. And that's what I like about markets. They do eventually adjust, which is why I spend a lot of my time asking people not to panic when we go through periods like we've gone through here recently.
A lot of this really in the future direction of the markets will probably ride on how Omicron is riding out here. And I'm not so worried about the virus variant as much as I am maybe an overreaction to it. When I see a number of countries all but shutting down, locking down, closing their borders, when I hear of companies and others, really sheltering their workforce, again, out of abundance of caution, I get that. And then big events that are put off, at least in-person events. And who knows what Bill de Blasio will rule on Saturday about a New Year's Eve celebration in Times Square. That's the kind of stuff I suspect the markets get rattled about too, if we overreact. What do you see or think about that?
You're right, but the market now is starting to discern that there are pockets of places like in New York City or Los Angeles which are prone to overreact, have more draconian rules, and a place like Nashville or Florida where they probably won't. So, I actually feel really bad for those local populations where restaurants have already suffered or workers have already suffered. It's not a coincidence that those economies are coming back much slower. They have far greater unemployment rates than other parts of the country, which have taken a more proactive approach. But there is one place, though, where we have to watch really carefully how they react, and that's China. You started off the show with the supply chain issue. This is all about really China, right? We talk about empty ships going there and a premium on containers, rather, that come back from over there. That's why we're paying so much money. And they have one border town, 200,000 people. One person got COVID. They closed the whole town, in part because they took such ham-fisted, tough, draconian measures that they're not prepared now. We'll hear more about natural immunity or acquired immunities and things like that in our country as it becomes less political. And we'll find out, I think, that it's going to help us a lot and give us an advantage over China. But our over-reliance on them continues to be a serious problem. And I think that reflects in the market from time to time. Listen, President Biden promising 500 million tests or some wild number yesterday. We're not going to create those in America. So where do we get them from? So I hope this is also a learning opportunity. What is interesting, one of the hottest stocks in the last 3 days has been Live Nation. That's a concert company, right? So the market's sort of looking over all of this. But I think the supply chain part and the relationship to COVID and any new variant is always going to be a dark cloud until we can actually start to produce more things ourselves in this country.
I was thinking about you, Charlie, when I was watching what's been driving some of the major averages, and a lot of it in just a few big names. Certainly in the S&P 500, you saw this Wall Street Journal piece about it. It's really driven by 5 stocks right now: Microsoft, Nvidia, Apple, Alphabet, Tesla, accounting for about half that, roughly 24, 25% gain. That's not the first time we've seen numbers like that where the few are leading the many, but does that part worry you?
Neil, I have talked about this on my show for years, right? I mean, I always talk about this. That's why I get frustrated. I don't ever say that the Dow is the market. I'm reluctant to say even the S&P is the market because, to your point, when 5 names or 6 names can drive that market, I've seen days recently where you've had on the NASDAQ 3,000 stocks down, 900 up, and the NASDAQ was up. That's misleading. We have been in an actual market implosion. You know, folks who've compared now to like the tech bubble, guess what? Our tech bubble blew up this year beneath the surface, out of sight, and it's been extremely painful. So it does worry me, and 2 things. You know, people who get stuck in some of those names have to make major decisions. Do you ride them out? Do you buy more? Do you sell? And so it is misleading. And that's why I think it's always better to sort of delve into the market. How many stocks are up? How many were down? How many new highs? How many new lows? Right now, the bias is strictly to the downside. Even with this rebound, every day we're getting far more stocks hitting new lows than hitting new highs, and that's something that's going to have to change. If the broad market comes back, that gives us all opportunities to make more money and make it more sustainable. We don't want everything to hinge on a half dozen names.
You know, finally, Charles, while I have you, did you buy Goldman Sachs with that estimate of pairing its GDP growth? Because I thought it was outlandish. First of all, it's the only major firm that had that view that without Build Back Better, the economy is going to churn out less next year.
Yeah.
To my knowledge, it's the only premier firm that has stated that. It goes against the grain and common sense. Obviously, the president leapt on that. What did you make of it?
I thought it was political. I feel like, you know what, that's the donor class saying, yeah, we want, and I've always said this to you, you know, the Wall Street firms, the Goldman, they don't care. Forget about consequences, you know, what happens to our economy. Push come to shove, we will bail them out, the American taxpayer. So, yeah, pump, 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 pump. Keep pumping. Go over that cliff. We don't give a damn where the cliff is. Go over it. Pump, 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 especially right before bonus time. I thought it was ridiculous. And the amount that they said it was going to decline. Here's what they didn't say. How much will inflation decline? Because, yeah, remember our buddy Jim Rogers used to always say, give me $1 trillion and I'll show you a good time? Of course, if they pour $1 trillion into the economy, the GDP is going to be higher. But what is the real GDP going to be? What is your real purchasing power going to be if you keep fanning the flames of inflation? It doesn't make sense if I make $1.10 when it costs me $1.20 to live.
It's a very good point. So I'll put you down as a maybe on Goldman in that forecast. Man, oh man. I mean, not to mess with you, young man. All right,
I just don't
thank
like
you very
the
much.
disingenuous nature of it, Neil. I think
I thought the same thing. That when I heard that, I said, "Are you kidding me?" That would be like saying, you know, eat all the dessert you want and never gain a pound. Wait a minute. All right, Charles Payne. See you in about an hour and 45 minutes, my friend.